Hey, what's going on, YouTube family? Back with a brand new video. This one's a very interesting video. I just interviewed a gentleman under the name of Angelo who's in the mortgage space. He's one of the top producers in the country. He's got a lot of interesting programs for those who are considering getting into homes or actually investing in real estate. The reason why I want you guys to pay attention to this is because this guy has a lot of knowledge that he's going to be dropping, and I want you to learn from him. And of course, take notes if you can, or watch this video in full and replay it. In between, there are some technical glitches, so I do apologize. I just finished that recording, but I'm going to put it raw out there, so I want you guys to really take the notes that you need to. Like this video if you love the stuff I'm sharing with you guys. Leave a comment below about what you learned today. And as usual, I look forward to seeing you guys next time. This is your guide and mentor, Ali Tarafdar. Catch you in this video. Let's get started.
I have deep admiration and respect, but other than that, I mean, yeah. But thank you for asking, man. Did you go?
No, I couldn't, unfortunately. I had several commitments. So
Okay, gotcha.
yeah, so the way it works is I'm actually in the family office space, so I do a lot of with direct investing and coordinating.
Oh, nice, nice.
Yeah. So I've been busy with that. I wish I could go just to see the feel of it. I know a lot of people didn't like the fact that they had to really focus to listen to what the speakers were saying because they were so far. So
Yeah, yeah.
that's painful. So thanks for first of all for doing this, man. I greatly appreciate it once again. So listen.
Can you hear me okay?
Yeah, I can hear you perfectly. Can you see me? Like everything's okay there? All right.
Okay.
All right, great. So listen, like the reason for me doing this is, of course, you know that I'm launching this podcast. I'm trying to interview individuals who are actually making a change in their industry. They're doing a lot of activity, and more importantly, to add value to those listening.
Right.
So there's two things, right? Like one of the things is I'm in the credit space myself, aside from investment banking, and a lot of these individuals who are actually going for homes or trying to qualify for financing are super confused. Like they don't know where to start or
Right.
how their file should look like or what are the options they have, right?
Right.
So most of the questions around that will be, centered around mortgages. But I want to start with you. Tell me about your journey. How did you get involved in the mortgage space? Just out of curiosity.
Yeah. So it's a really good question. I went to school at Bauer College of Business here in Houston and to study finance and economics. And I grew up from a very poor family, struggled severely economically, and was working, meager jobs while I was going through school. Making $1,000, $1,400 a month, trying to pay my way through school. And I was a limo driver while I was going to school, and I ran into an old friend of mine one night. I worked had to cover a club here in Houston, a premier club, and he pulled up in a brand new Escalade back in 2004. That was the car to get, Cadillac Escalade, and he had a $2,000 suit, pulled out a wad of cash. I hadn't seen the guy in 5 years. He was my old best friend, and he looked like a complete metamorphosis from what I saw. Anyway, so ran into him. He was in the mortgage business. He was making millions of dollars in the mortgage industry. And I thought it was a total sham. I didn't even know what a mortgage was. I was 20 years old. And he's like, no, man, I got into the mortgage industry and I'm doing really, really well. Why don't you come by my office? I'll show you, what I'm doing. So I went and saw him, and he basically laid it out for me and showed me the process of how it works, what to do. And I became a believer. I went to go work for his bank and, quickly learned the business. That I went from making, $1,000 a month, and then to making $20,000 a month, and fell in love with the business of helping people to refinance, cash out, pay off their debt. And I think what I really liked about it, because I grew up very poor, was that I was able to prosper economically and at the same time help people to accomplish their dreams and their goals. And so this was back in 2004. And so from there, I went and became a broker, and then started to learn the business and master my skill and my craft in the mortgage and real estate industry. And then from that point on, my career just blossomed. Get into other verticals with respect to real estate and banking. But that's how it all started. It was the inspiration, the allure for my old friend.
going back to conversation, I apologize. So essentially, your friend introduced you to the business, and you took off from there.
That's,
I see. That's interesting. So when you started your journey into this mortgage business, like what are some of the most difficult things that you had to go through as a learning curve? Like, would you say on a personal level or professional level as well?
yeah, the biggest challenge that I've had is not for me to be successful, but for scaling.
For scaling.
So like, yeah, for me, like and the thing with, it's kind of like, give an example, analogy, like with Michael Jordan. Michael Jordan is the best basketball player of all time. But they talk about when he was playing high school ball that, he got, benched from the team because he was so arrogant and just self-centered and didn't really care and understand how the importance of the team was to the overall cohesiveness and making everything function. And so the coach actually banned him, for playing basketball in high school for the year because he didn't care about the team. He just cared about himself. And the thing is, if you're trying to scale a company and to go from 6 figures to 7 figures or 7 figures to 8 figures, it's no longer about you, right? And it's about the whole group, the whole team. And it's been one of the biggest challenges that I had was to get outside of my head and to focus on my people and building them up. And because I could, like, for example, I can work 18 hours a day, 7 days a week. I can tell the customer, overcome objections. I can handle the sale. I can handle the close. I can study and read all the books. But inspiring my people to do that has been something that was a huge learning curve for me because, like, I'm very militant in my way on myself. I'm very hard on myself. Like, I'm very disciplined. Like, I run 10, 12 miles a day. I have a very strict diet and all of these things. And so, but for me to get other people to, for example, just to delegate the task, it does. There's a lot of stuff that falls in between the cracks, and so recruiting the right people, the training, writing the training material. You just can't tell an employee or subordinate to go do something and then have them figure it out. Like you have to be able to break it down into incremental pieces and be able to explain that to them very clearly. And then you have to give them time to work on it and then hold them accountable, to the objective or the goals. And so I had to do an immense amount of studying under some of the greatest business leaders of our era, how they managed to scale their business. I've probably spent the last 5 years just studying under people like such as Jeff Bezos, Sam Walton, John Doerr, on how to actually grow a company and manage people. Just different business books. I mean, on how to structure and run a business. And that's been the biggest challenge for Melly, do it right.
To do it right. Okay, I see. So I'm assuming, like, of course, on a day-to-day basis, you're dealing with different personalities. How is that for you, like, when it comes to, let's say, handling that kind of pressure? Are you able to get it
Yeah.
through?
Yeah, I mean, it's you have to. I think that you can't be the same way to everybody. Charlie Munger, who's Warren Buffett's business partner, says that there's one of his cognitive biases is a man with a hammer syndrome, where you try to handle everything with a hammer, and not everything can be handled with a hammer. Some things need to be handled with a screwdriver. And so you have to communicate and parlay to different people. Some people are more emotional, some people are more action oriented, some people are more social, and you have to be able to relate to them in such a way that they understand it, and so that way they can actually be effective and take action on it. So in other words, somebody that's very introverted and they're logical, I have to communicate differently to them versus somebody that is very action oriented, right? And I didn't know that in the beginning. I thought, hey, this is what you need to go do, and just go do it. And it doesn't work like that. And even in recruiting people, man, hiring the right people. One of the things I learned from Reid Hoffman, the founder of LinkedIn, is that, the first 50 people you hire in your company, they're going to make or break your business. And you better hire the right people. And you got to be very careful about who you let in the door.
That's crazy, man. That's definitely true, though. It's a testament to leadership, essentially, right? Like how to go about hiring the right type of
Oh
individual.
my God, yeah. Hiring the right people. The right incentive compensation package, that's a whole book right there. Um, and then laying out the objectives for each department. It's it definitely will consume. All of you, and and if you want to do it right, just I think for me that's been the because yeah, the thing is, you understand, I built my company by myself. There is no investors. There's no other board. We have other members that I consult with, consultants, but everything that I've done has been from the ground up, right? So my own money, my own time. So I didn't have like Coca-Cola has a big board that have billions of dollars and they can go get all these consultants. I don't have any of that. So what I've been able to do here has just been on my own. And so, but I've spent a lot of time, man, learning under people, man, reading, studying.
Yeah, that's amazing, and it's a testament to your success, which is good because it shows that you integrated some of these qualities in leadership, and you kind of know what you're doing. Because, or else, this kind of business, when you're dealing with a lot of people, underwriting or mortgages and handing off homes to individuals, it's not an easy thing. Because one of the things I'll notice, Angelo, is back in 2008, I was in the business. I was doing debt arbitration. I was
Yeah.
that type of individual analyzing the portfolio of these bad loans and essentially reselling and positioning it. And the worst part is like leadership was lacking essentially, right?
Yeah.
There's a huge discrepancy there, and teams were, yes, they were there, but like you said, teams can make or break your business. So finding that type of talent was hard. And for me, like when I was looking at these different mortgage companies, they were just all over the place, very spread out, and there was no direction, and they had no a kind of vision to stick to something they want to do long term.
Right.
So
I agree with that.
it's painful. It's painful because a lot of people lost their homes, and of course, I see some of these companies like they could have done better than what they were, right?
Yeah.
So tell me something about the business that you built. Like what kind of now we're gonna get a little bit technical, hopefully, so that those listening in or watching can get some benefit here. So I get a lot of customers asking me, "Hey, Ali, when is the right time to buy a home? What should I do? Here's my money. Here's my income. Here's my credit. Can you give us a breakdown of like the typical type of buying process for a mortgage? For those looking for a home, if you don't mind sharing."
Yeah. As far as how like, what's the process to buy a home?
Yeah, so let's say somebody comes to me and says, "Ali, I'm ready to buy a home. Do you think it's the right time? Can you give us some sort of advice or
Yeah.
background on some of that?"
Yeah. So, the basically, the process is the first thing is that you want to get pre-approved first, right? Because you want to see where you stand with respect to the different products that are out there, whether it's FHA, VA, USDA, conventional. The first step is to get pre-qualified. You want to meet with a loan officer and sit down and have them, pull your credit, verify your income, see what you can get pre-approved for. They look at your debt to income ratio, your credit score, and they're going to compare, what you're trying to accomplish with what you can actually qualify for. So let's say that, you make $100,000 in income. Typically, you can go to 4x of what your earnings are. So someone that's making 100 grand can buy like a $400,000 house. That's not exactly 100%, but that's a general rule of thumb. So the whole idea is you want to get pre-approved first, where they check everything, and then the bank gives you a pre-approval letter. That gives you the power to be able to purchase a home, right? You give that to the realtor, and then you guys can go start house shopping, and then the seller and the realtor know that you have your funding lined up so you can buy with confidence and then put the offer and the contract on the house. So first step is pre-approval. Second step is we assign you to a realtor, or you already are working with a realtor. And then the third step is you start to shop for a house. You can buy a brand new home, an existing home, a foreclosure, a FSBO, for sale by owner. Then you put the offer on the home. If your offer is accepted with the negotiation process with the seller, then you'll sign an executed contract with the seller. Then you go into escrow. And then the fifth step is you go into underwriting, and then we'll order the appraisals, the inspections, the title opinion. We'll check to make sure everything's kosher. We'll get the insurance binder on your property. And that whole process takes about 30 days to underwrite and check everything. And then from there, you go to closing at the title company. And then that's where you'll sign your final documents. You'll sign your warranty deed, any vendor's lien, depending on what state you're in, and you'll take title to the property. And then the sixth step is closing. We'll fund the loan, and then you'll take ownership of the property. That's the overall, process to be able to buy a home. I'm going to tell you that the first step is the most important, the most critical. I believe that preparation is key, and you want to make sure that you're truly pre-approved and that you have everything lined up with your money in your bank account and your credit, because what you see, you probably hear this a lot, or you've seen this a lot, where deals fall apart or they go sour in underwriting because the deal wasn't structured the right way in the beginning.
Yeah.
Right. Somebody at the bank made a mistake, or the customer, they didn't have their money right, or they moved the money around, or they changed their employment, or something happened to their credit, and then now they can't get the house. Now the deal fell apart, and so you have to. The most important thing for us, Ali, is making sure that the person is really approved in the beginning, so that way when they go to buy the house, they can actually close and make sure they're going to get the loan. Okay, because there's so many phantom pre-approvals out there where, some new loan officer is giving somebody a loan approval, and then the family doesn't really qualify for the loan. And then they lose their earnest money, they lose all this time, they lose the house. So my first thing is, I would say preparation is key. Make sure you get a true pre-approval.
Yeah, that's very interesting. A lot of people are scared of that process, I think, because
Yes.
They're like, oh, what if I get denied or something? So,
Right.
can you give me a scenario where, let's say, you go through a customer and, like, what are some of the things or most challenging files you've seen so far, just without actually disclosing their financials? But what would you say is?
Oh yeah, so we deal with all. So we're a nationwide commercial and residential bank. So we do apartment complexes, hard money, investor. We do lines of credit. We do, FHA, millennial, first-time buyer, BA, and we see everything from prime A paper to somebody that's got a 500 credit. And the biggest thing for us is that whenever we take anybody in, our mission here, one of our core values is customer obsession, and to leave notes. And our second core value is to do whatever it takes. And our third core value is to leave no stones unturned. So we don't care whether it's a multi-millionaire customer or the veteran that has a 520 credit score. We're going to do whatever it takes to help that person. Some of the most challenging loans that we've seen have been, where somebody just got out of a bankruptcy. They have a low credit score. They have a good job, but their bank denied them. They can't buy the house just because of a few credit blemishes. And we'll help them to boost up their credit and to get them pre-approved so they can actually purchase the home, right? We can take them from we have something called a Fresh Start Credit Booster, where we can take them from a 523 credit to a 600 credit score for free. We do it. It's a free VIP service that we offer to boost up their credit, to actually get them pre-approved and get them into the home. And then we give them their pre-approval. We'll clean up their credit. We can remove any collections, any judgments off their credit. And then, get them funding so they can actually get in the house. We can also register them for first-time buyer tax credit. There's a tax credit in California. There's in 23 states where you get up to $15,000 of assistance for down payment and closing costs. So, but yeah, people that that have a lower credit score, or they just got out of a divorce, or they lost their job and they have a very challenging situation. We want to help them as much as we can. Our belief is that if you have the ability to repay, then you deserve to own a home, as opposed to wasting that money on the rent.
You're right about that. A lot of people in the industry are actually teaching, hey, look, don't worry about home ownership. A lot of people are just against it. They're just saying, well, look, it's going to cost you a lifetime to pay it down or whatever. But end result is, the way I look at it, it's definitely, a lot of people say it's not an asset, right? But if you look at it this way, instead of that rent, you are paying it down. So the equity happens over time, right? Like let's say even if it takes 10, 15 years, you're still building up that liquidity, but there's appraised value, right? Like it does go ahead and appreciate over time as well. It's not just
Sure.
stay
Sure.
stagnant, especially in some beneficial markets like opportunity zones and stuff like that. So
Right. Right. I
um,
mean, here's how I look at it, man. If you can get a house with little to no money down, or 3 or 5 or 10% down, we all know that real estate appreciates. So you have little capital outlay. We know that the asset's going to appreciate, and I mean, depending on, and then obviously the appreciation rate depends on the market that you're in. But why would you not want to do that compared to spending $2,000 a month on an apartment complex? No, your kids can't. You can't put your kids in the second story of an apartment. They jump around, and then the neighbor is going to kick you out. You have no privacy. You don't have a garage. You have to park and share the park. You don't even have a trash can. You have to walk all the way down to the community dumpster. You can't have nothing you can call your own. At least if you can sell the property maybe in 5 or 10 years and make 15 or 20%, you have a chance, and you're invested in something that is technically on your balance sheet as an asset. I don't see that as a negative. Now, I will say that if you're very savvy with money and you're an entrepreneur or you're an investor and you're contemplating whether to invest in yourself or your business or put 50% down on a house, no, that doesn't make any sense. I'd rather invest in myself and my business than go put 50% down on a house. I mean, you have to look at the situation. Like, I do a lot of leasing. My company, and any of my homes that I own, I'll put them in my company lease, or car vehicles. I'll lease them with my company because I'm building my company credit, and so I'm not going to take on that risk personally. So you have to look at the person's situation and see, if we're talking about, the average Joe or millennial or first-time buyer, I believe it definitely makes sense for them to buy. I'll say investors, because we do a lot of investor loans. I mean, it definitely makes sense to them to give them a line of credit so they can flip properties or wholesale properties. So, but can you say for everybody? Okay, Grant Cardone, he's not a big advocate of buying a house. He's got a way different situation.
yeah,
And the man's worth $500 million and has $1 billion in real estate holdings. He doesn't need to be thinking about buying a house right now. He's investing so much in his brand and his business that's his ROI.
yeah.
He's not concerned about buying a house right now. That's not his main concern. You know what I mean?
Yeah, yeah, you're right about that.
Yeah,
So
he leases his high rise from his company.
yeah,
So it's a different deal, man.
yeah, definitely. So yeah, like every situation is definitely unique, and I understand his perspective and what he's trying to do, and of course, it's not everybody's going to have the same type of situation, right? With these type of
Yeah,
individuals. So,
but I think for what you and I are talking about, most of the populace, it certainly makes sense. And if it's not a primary residence, definitely from an investment standpoint, like buying apartment complexes. We help a lot of investors with apartment complex acquisition. So you're still going to need a mortgage in that place to be able to get the funding to be able to take down a large apartment complex.
yeah, you're right. That's definitely true. So one of the things that you touched on was the millennials. So I know that lately, having to attend a lot of real estate conferences and stuff, so much, and we're talking about the family office space here. They're so, investing like, $250 million here and there into buying these thousands of units because they feel like all the millennial generations are actually staying away from home. Do you see that as a trend, or do you see something completely opposite of what I just stated? Like, are they avoiding the home purchase?
You're seeing millennials are kind of staying away from buying a house?
Yeah, yeah. So a lot of these, because what I deal with is the institutional guys, right? Like they go in buying like 2,000 units, 3,000 units, and most of them are essentially, looking at prime locations where there's, universities type of situation. And what they've noticed in their situation is a trend where millennials, for some reason or the other, are avoiding purchasing homes because they don't feel like it's a debt they want to take on. In your opinion, or what you're seeing on your side, what do you say about that? Like, have you seen that trend?
Yeah. That's an interesting point. I will say that I'll tell you this, in in the last year, I would agree with that.
Hmm.
I would agree with that. The percentage of people that they're more gun shy,
Hmm.
trigger shy to purchase a house, millennials, they seem to be less committal or less uncertain about what they want to do, and they don't want to take on that obligation because in their mind they think it's an obligation. And then I think that what you're seeing is that a lot more of the developers, and I don't know what city are you in?
I'm actually in Montreal, and I travel quite frequently to New
Oh, you're
York.
wow. Okay.
Yeah, yeah. So I'm in the New York area mostly. Sorry,
Okay.
go ahead. Yeah.
Oh, okay. So you're in Montreal, right?
Yeah.
Okay. That's a major urban, metroplex, kind of like LA, kind of like, New York, Miami, Houston. These developers are doing these kind of co-op share things right now where, you can just rent. And so because you're running out of space, and I'm seeing a lot of these millennials, like when I was in Miami for 10X, I mean, that's what I kept seeing was condos and these co-ops and these share type communities where you just rent. And I'm seeing that just like in Houston, right? I'm in Houston, and we're seeing thousands of millennials doing that type of thing, that type of situation. The other thing is that I think that there's a skewed connotation that it's very hard to qualify to be able to get a mortgage because of the conventional thinking of going to a bank with the bank's very strict requirements, right? The bank says you need 740 credit, 20% down, and the millennials like, well, where am I going to get this money, right? And so they're not aware of the down payment assistance, the grant programs, the Chenoa fund that helps with buying a house with no money down, FHA, VA, USDA, some of the programs that we specialize in to get that down payment assistance and that grant money to be able to buy a home. So we really educate millennials and let them know, hey, why are you spending $2,000 a month on this condo over here? Because you can actually own it with no money down. So I think that there's not enough education out there to let people know that the funding's there to help them. And then the developers, like I said, there's not a lot of land left in urban metroplexes. So they're from what I'm seeing that there's been a lot more shift towards these lifestyle type developments where you have some of them have a shared equity and some of them you're just renting. So there seems to be some type of, I don't know if you've seen that, but it seems like there's been some of in the recent time frame a shift towards that. So yeah, I mean, I would agree with you though.
Yeah, gotcha. But what are some of the things that you would give in terms of advice to millennials, basically right now? That look, I understand the education is probably not there; they're not aware, and they're afraid of the traditional and conventional way of doing it. But what's your advice to these individuals, these young guys and girls who are trying to actually get into the situation where they can own a home, without actually worrying?
I would say that, I mean, like whether you reached out to me or to a qualified mortgage expert to explore your options with respect to the down payment assistance, the grant programs, tax credits. I mean, there's so many different funds out there that help millennials, first-time buyers, with being able to buy a home and cover the down payment and the closing costs. Like if you look me up online, Angelo Christian Mortgage, you can see all my information on Google, and you can call my office or anyone else out there that's qualified, that's really good, that knows about these type of products, and see what you qualify for to get you pre-approved. Because I mean, if you just do the comparison, you just compare apples to apples, and you're spending $2,000 a month on the rent, and we can get you into the home for $1,600 a month and no money down. I mean, why wouldn't you want to do that?
Yeah.
I mean, it's a no-brainer, man.
Yeah, you're right. So another thing about that is that, oh, by the way, like I'll actually be sharing your link below the video so like people can watch. That's a very good thing. Like, of course the savings element is there, but also now they're homeowners at the same time. So one of the things that I see a lot, especially with like people being scared to commit financially to putting a down payment and stuff like that, like they're saying, well, no, I need 10%, 20% down. There is no such thing as 0% financing. Can you help us debunk that myth? Like, it's a lot of things that are garbage going around that people think for a
Yeah,
fact.
yeah. So right, and that's exactly what I'm saying. That okay. So with, for example, FHA loans,
Mm-hmm.
down payment is 3.5%. VA loans are 0 down to 100% financing. USDA loans are 0 down to 100% financing. There are conventional loans now, Ali, with 0 down, 100% financing.
Well,
Okay,
okay.
so yeah, but that's the thing is that the only part there's not many people except for me and maybe a few other people that are actually promoting this on their channel, on their handles on Instagram and YouTube. So you don't need 20% down to buy a house. It's not true. You can put 20% down if you want to. There's nothing wrong with that. It may not be the best allocation to capital depending on your situation, but there's many products, many funds out there to help you with covering the down payment or the closing cost. And it just depends on your situation, where you live, whether you're a first-time buyer, what you qualify, what county you're in, your income and your credit situation, whether you serve in the military, if you live in a rural community or urban community. So we have to assess your situation and see what's going to be the best fit for you. For some people, it does make sense to put money down, and some people it doesn't, right? I mean, we had a veteran on our show yesterday, and he just closed on his house with no money down, 100% financing. They had all his closing costs included. He served in the military for 22 years. So, I'll tell you that I really believe it depends on the person's situation and what their goals are, what they're trying to accomplish. But it's absolutely 100% false that you need 20% down to buy a home and that you need a 740 credit. You can buy a house with a 500 credit score, a 580 credit score, a 640 credit score, with 0 down, 3% down, 20% down. I mean, there's so many different options out there in the marketplace.
Yeah, so there are options. That's the key right there, right? A lot of people are scared. They feel like they're trapped, but honestly, like, you have to talk to those professionals, such as yourself, of course.
You do. I agree with that 100%.
Yeah. So, well, I guess like most of the questions are pretty much answered. So, can you give us like just a quick breakdown of the different type of loans you just discussed? The FHA, the VA, just a quick breakdown of how they would work. What are the options?
Yeah.
And
Yeah, so USDA is it's a rural home loan. It's United States Department of Agriculture, and it's literally 0 down, 100% financing. You can even get your closing costs included.
Mm-hmm.
For people that generally make below $120,000 a year in income, you do not have to be a first-time buyer. It's available nationwide. It's for rural communities, so on the outskirts of major metropolitan cities. Or small cities below a population of 20,000 people. That's for USDA, really awesome program. We are the king of USDA. Then there's the VA loan, that stands for the Veterans Administration. That is for veterans that served in the military, that are honorably discharged or active duty, that are able to buy a home. You can literally get 0 down, 100% financing, no mortgage insurance, no location restrictions, no income cap requirements. You can buy anywhere you want, brand new, existing, condo, townhome, mobile home. You can build a house, available nationwide. Then there's FHA, which is the Federal Housing Administration. And this came out by Franklin Delano Roosevelt in 1933 to spur the U.S. economic housing. And basically, this is a blanket loan available for good and fair credit customers to be able to get funding when the banks are a little bit more strict. If the banks are tight on the money or tight on the loans, they'll go down to a 500 credit score. They'll work with you on the credit. They'll help with the closing costs. Low interest rates. You don't pay a high interest rate because it's government insured, government backed. There is a loan limit. The limit's based on the county that you live in. It's usually under $500,000 US dollars. To be able to qualify. This is not for rich people, so this is for people that are generally, that are making, under $200,000 a year, total household income. But it's available nationwide. It's a full documentation loan, and it's one of the best loans out there. And then there's obviously conventional loans that are made by the banks, and those are underwritten by the bank underwriter. They have mortgage insurance on them unless you put 20% down. They have loan limits usually up to $750,000. And then there's also jumbo products That's for people that are buying, higher end properties, more astute, up to, $20 million homes. Jumbo product where they put 20, 30, 40% down. Those are also available nationwide. And then there's portfolio loans. Portfolio loans are a hybrid of subprime and Alt-A credit, where it's not subprime, but it's not prime. It's in the middle, where it's light documentation, flexible requirements for the self-employed guy. He can't show the tax returns, or the person that they're from another country. They're like from Canada, for example. They don't have a social, but they want to buy a house in America. So flexible requirements on the documentation. You pay a little bit higher interest rate, about 6 or 7%, but you get the funding that you need, and you don't have to supply all the heavy, intensive documentation like a regular loan.
Got it. So in a portfolio.
So those are the
Sorry about that. I was going to ask, on the portfolio loan side, what's the down payment required for foreigners who are coming in?
Usually on portfolio is 20%.
Okay.
Yeah. Okay. Usually on a portfolio loan, the interest rate, like I said, is going to be higher, but much more flexible, on the requirements.
Gotcha. Awesome, man. Thank you so much for breaking that down.
Yeah, for sure, man, for sure. And like I said, if you guys need any help with any funding, we're a nationwide bank lender. You can call my office. You can reach us at 281-817-HOME. That's 281-817-4663. Please follow us on our YouTube, our Instagram. We're trying to grow to 1 million subscribers and help as many people. Our mission, just so you know, Ali, is to help 10,000 people every single year to get into a home or to get funding. Whether that's, apartment complex, a millennial, a veteran. So any way you can share this information and get it out there to the world, we want to be able to help people.
Absolutely, man. I'll be sharing this on my channel, so I'll put the links below for both all your social media assets, and I greatly appreciate your time, Angelo.
For sure. Thank you so much, Ali. Take care and peace out. God bless you, man.
All right, man. We'll talk soon.
Thank you, buddy. All right, bye-bye.
All right.